Yo, what's up everyone? How's it going? My name is Raymond Jeffries. I'm a Forex trader. In this video I do for you guys every week, I like to show you guys what I have on the radar for the upcoming week. But more importantly, to break down the charts and show you why I'm viewing the markets the way I am. And this week's video, we're going to have a few different things on the radar. Whether you're a pullback trader, a breakout trader, or a reversal trader, there's a little bit of everything. If you guys want to check that out, go ahead and look down in the description box below. But the other thing I mostly want to focus on in this video are you basically read in the title, the two most powerful words that have helped shape my trading for the better. And you know, in trading, people think, oh, is it higher time frame analysis? Is it bullish, bearish? No, it's a lot more simple than that. The two main words that have helped shift my trading for the better in regards to learning the right way, and those two words are if and then. I know, simple, right? Oh, how can those two words help shift your trading? Those two words have made me be more systematic in my trading. Before, I was really inconsistent. I would just kind of take whatever was there at the time. I would inconsistent in regards to what I was looking at. I never did the same thing twice, and it's not surprising why I was failing. And I had no idea why I was failing. I'm like, man, why am I losing? It's because I wasn't being consistent, and I wasn't exactly breaking down what I was doing in a if-then syntax, and I wasn't doing it systematically in regards to knowing how I wanted to attack the market. It was a little bit different every time, and without actually even knowing if I had an edge in that market, which is something you actually need as well. But using that if-then syntax helps you do that as well. What I mean is that when you have something, you have an if-then syntax, like in regards to you have a strategy you're looking to trade. If this happens, then I look for this. If that happens, then I look for that. And if that happens, then I enter a trade. Boom, very systematic. The difficulty with trading is that there's a lot of gray area, especially if you're a newer trader. Like I said, like when I was new, I was very inconsistent. There's a lot of gray area in trading. What we want to do is we want to make it as black and white as possible, knowing that it'll never be completely black and white. But our job, especially as newer traders, is to make it as black and white as possible. And this is something that, like I said, I had to learn the hard way. As you grow in your trading, you can start seeing the different grays, and trading is an art and a science from what I've learned. I can definitely see the science side of it, but there is a different art when it comes to trading as well. And I think the more time you spend in trading, then you can start, influencing that little bit of more art into your trading. But especially for newer traders and traders who are trying to be consistent, it's very important to be very black and white. Make rules for everything and have a very strict rule set in why you're getting involved in the market, why you're not getting involved in the market. So in this video, like I said, I'm going to show you what I have on the radar, but I'm going to be breaking down the setups we're going to be looking at in a if and then syntax in the statement. So to show you, how important it is to have a very consistent set of rules before you enter a trade. Yeah, so hopefully you guys get value out of this, like you got out of my other videos, I hope. And if you do, don't forget to hit that like, subscribe button down below and the little notification bell, that way you don't miss any of my future videos. And as always, if you guys want to hop ahead to any certain pair, that should be down in the description box below as well. With that being said, let's hop into the charts. Alright, so let's look at the first pair we have on the radar, and that is the AUDCAD. So looking at the AUDCAD, if you're new to my videos, what I like to do is do a top-down analysis where I start off from a daily and work our way down. Looking at the daily, seeing what's going on, you can see recently we've had a strong bearish day. You can tell by the candle formation. You see the market pushed up a little bit, but we closed on the absolute low of the day, which is a very bearish sign if you're just going off of candle formations. So that's what's currently happening in the market on the daily. So we work our way down to the 4-hour, kind of see what's going on here. Depending on your eye and depending on how you see the market, we do have something forming right here in my eyes, and that would be a inverse head and shoulders possibly forming. So what I always recommend you guys do, let's draw out our levels of structure right here. So this right here was a level of structure, as you can see, but it was violated on this candle right here. You can see we had a higher high, higher close. So now when that happens, this becomes a level of structure to the upside. So when we're going down, we're looking at this chart, and you're telling yourself, okay, well, this could be a possible head and shoulders forming. Well, inverse head and shoulders, same thing. You have to say, okay, well, how can you get involved? Firstly, you have to ask yourself, how aggressive are you as a trader? Are you an aggressive right shoulder trader? I think I went over this in a video not too long ago, where we're kind of going over the head and shoulder. I think it was on Euro Yen a few weeks ago. It wasn't as clean looking as this one. This one's a lot more textbook. And I actually like this one a lot more because we actually did break above that left shoulder in regards to having a higher close on that candle. But you ask yourself, okay, well, are you an aggressive right shoulder trader of the head and shoulders, knowing that this is the most aggressive way to get involved? And you ask, why is this the most aggressive way? It's the most aggressive way because the head and shoulders has not yet formed. So if you are an aggressive right shoulder trader, you can ask yourself, okay, well, I want to get involved somewhere right here. And now, like when we talked about in this video, how can we break that down in an if-then context to get involved, to make sure we're consistent every time when we look at this right shoulder? A way to go about doing that is saying, okay, once price is forming that right shoulder, I need a retest of the left shoulder's low. And the low on this candle right here is, or the close is 95.25. So if then syntax, sorry. So if price comes down, retests that left shoulder, retests the low and holds, then I look for a whatever it is you need for an entry, higher close, double bottom. And that's when you can add filters as well. You say if price retests that left shoulder, then I look for price to go overbought. If price goes overbought, then I look for a higher close. Then I look for divergence. Whatever it is you need in regards to filters wise, you look for that. Then you look for your reason for entry. Then you look for, like I said, a higher close, a double bottom, or I go down to a lower time frame, and then I look for this, and then I enter the market. That's a way of breaking the chart down, breaking your analysis down, breaking your setup down, where there's no real room for the gray area. It's black and white. If this happens, then I look for this. If this happens, then I look for that. So right now we're looking at this. If you are an aggressive right shoulder trader, like I said, you wait for price to come down, retest that right shoulder. If that holds, then you look for some type of higher close to get involved. Then you ask yourself, okay, well, if that happens, then I put my stops in ATR below the lows. Then I put my stops to ATR. Whatever it is you choose to have your stop as, you have that. Boom, that's set. Every time you enter this trade on that right shoulder, you always put your stops in ATR below the lows of the shoulder. Perfect. Then you look for targets. Then you want to put your targets on. Where do you want to have your targets be? Personally, if this was me, initial targets for me would be a retest of the neckline. So let me start over from the beginning so we get a clear idea. If price comes and retests that left shoulder, then I look to get involved. Then I look for a higher close. Filters or whatever. I look for price to go overbought. Price goes overbought, then I look for a higher close. If I get a higher close, I enter the market on a market order. If that happens, then I put stops at ATR below lows. I put initial targets here at a retest of the neckline. If initial targets gets hit, then I move my stops up to break even, and I look for secondary targets at a 127 extension. Very black and white, no gray in there. I know exactly what I'm doing every step of the way, and it's as simple as putting everything in that if-then context. So, like I said, if you are a right shoulder trader, you look for price to come down, retest that left shoulder. You look to get involved in there, whatever entry reason you have. Then you look for, me personally, what I would look for is a retest of the highs in regards to as for initial targets. Then you want to look for possible secondary targets. What you can do if you want to look for secondary targets, you can use fibs. Look for a 127 extension. You can see a 1414 lines up in this little structure zone before the breakdown. And actually, you can even see if we come back. If we take a fib from this higher leg all the way down, you can see we have a 382 a little bit lower as well. So you have a little bit of fib confluence in there right at the start of that zone. So that might be an area where you want to look to take those initial targets off if you do get involved in this, where you have that 127 extension and of this little leg right here, and you have a Fibonacci retracement of a 382. That would be a nice zone to want to look to get out at. And even if, depending on where the market stops, I don't think we have any ABCD patterns in here. But yeah, it's kind of hard to tell because the market's still going down. We don't know where it's going to come to. But say the market does come into this zone, what we're expecting that right shoulder to come to, you can see we have a 127, we have an ABCD pattern right there as well. So that'd be a nice, decent area to look for, at least a secondary targets if you're looking to get out of the market there. If you aren't a head and shoulders trader, or you aren't an aggressive right shoulder trader, what you can do is you can wait for price to come up, complete that head and shoulders, and then look for some type of pullback into this neckline. The only trouble with that is that depending on if you value structure, well, for me personally, I value structure, and so if I value structure, it's hard for me to get involved when we have structure right above here, so as you can see right here. So it's hard for me to make a prediction beyond this point personally, especially when I know we have a lot of fib confluence in here. So this might be one of those times where I would only like to really get involved in that right shoulder entry, a little bit more aggressive, get a better risk reward on the trade in regards to, especially if I'm looking for a market to come to this level. And that's why this structure violation was so important, and why I would be more likely to get more aggressive with a reason for entry on that right shoulder. So that's something to look for on this pair. There are a couple other things. Actually, now that I'm looking at it, I don't know if there is a 127. Nope, never mind. So that's like I said, if you're aggressive, right shoulder entry, we have a head and shoulders, inverse head and shoulders playing out right here. When we go down to the hourly, see what's going on. We actually had a pair. Oh, actually, I take that back. This was violated at the end of the day. You can see we did have a bat pattern that formed, X to A, right here to the highs. You can see right there, depending on your data. Let's see. So my data is 88. That came to 88. So actually, that is a Gartley because we hit the 618. And we want to make sure we hit a 618 on the reverse, on the C leg, which we clearly did. Then you take a 127 extension from A to B and back. This was your completion point right here. So you go X to A to B, B to C, and a C to D completion right there. This was a shallow Gartley. I don't know if this may have actually hit targets. Yep, it's actually hit target, so this is no longer a valid Gartley, which was nice because the market, you see the market reverse immediately off of that level. And right now we're kind of working our way down into this left shoulder. So yeah, that's kind of what I'm personally looking at for this particular pair. I don't really see any patterns, anything setting up. I'm just looking for this larger head and shoulders to play out. If we do manage to break above here, you can, like I said, you can work your way down to the hourly. You may be able to, or maybe on a lower time frame, look for some type of pullback trade. Like I said, there isn't a lot of room in there. You got from about 96.50s to about 96.80. So about 30 pips isn't great, like I said, the start of that zone, but maybe on a range bar in a lower time frame, you can look for some type of pullback setup, predicting a move higher. So that's what we have for this pair. Let's hop on the next one. All right, so let's hop into the charts for that next pair, and that is the pound CAD. So looking here at the pound CAD, similar to what we were looking at on the Aussie CAD, we had a very bearish day. The only difference is you can actually see right here, we're breaking a few levels of structure looking left. We're breaking, and this is a pretty significant area because you can see right here, this is a level that was tested multiple times in the past that we are now breaking through. So we asked ourselves, okay, well, we have a lower level close. What can that allow us to predict? That can allow us to predict a move lower. If you're going to go lower, where are we predicting price to go next? The main level that pops out to my eye is this level of structure down here. You can see right here, this is a level that was tested multiple times in the past as well. And this is that next major swing in the market. But we will see levels along the way that we may run into resistance in the market. And what really pops out to my eye is this wick right here. So when we go down to the 4 hour, and you see what's going on. You can see this is that lower close. That's that break. You can see we've been pretty bearish. This is actually looks like a failed head and shoulders kind of. What that looked like. We had the left shoulder. We had the head. We had a retest of that left shoulder. And this is one where the left shoulder didn't test the right shoulder. We came up, retested that neckline, and we broke down. This actually was a bat pattern that's invalidated as well. But I'll draw that out later. As you can see right here, this is that break of that neckline. That's a pretty clean break that we're looking at. So you can tell yourself, okay, well, I'm predicting a move lower. Where am I predicting price to go? Where's our next level of structure? This is that wick that was standing out to us. As you can see, this is a nice little swing in the market. Let me go back, make it a little bigger so you can see what I'm talking about. As you can see, that's that swing. That was that dip right there. See, price came down, then continued that move higher, consolidated before we broke out to the upside. So this is a swing in the market where we would expect to see some resistance in the market before, and the next area would probably be this gap that occurred, but this is that first area we're looking at. So what I like to do is I like to map this out. Let's draw this out right there. Boom. Get a clear view of what that looks like, is a little easier this way. Boom. So this is the next level where we're predicting price to go in the market. So you ask yourself, okay, well, this is where I'm predicting price to go. How can I get involved? What can I do to get involved in this move? After we have this lower close, what you can look for, depending on the type of trader you are, let's break this down in an if-then kind of syntax. So, if we get a break of structure, then I look for a pullback into that neckline. I don't want to say neckline, but I don't really know any other phrase to say it, but I think you guys get what I'm saying. So if we get a break at this structure level, boom, which we have, then I look for a pullback into this area. The way I view the market and where I particularly look for when I look for pullback trades is I look for the lowest low to the lowest close. So this is the zone I look for when I look to get involved in an initial shorting or going long, depending on the direction of the market, where I'm looking to get involved. So let me break that down. Okay, so if we get a break at this level, then I look for a pullback into this zone. Once we get a pullback in that zone, if price goes overbought, then I look for a lower close to get involved. Personally, I look for price to go into the zone, then I look for a double top. If I get a double top with divergence, then I get involved on a completion of that double top. If I get involved in the market on the double top, then I place my stops in ATR above the highs, wherever that is, boom. Then I put my targets at a retest of the lows, boom. Then I put secondary targets at where I'm expecting price to go overall in the market. Depending on how aggressive I am and depending on where my overall prediction is, that would be this level right here. Somewhere in this zone, boom, okay. So you can see how it's very much structured and how I know I'm going to handle the trade every way. So say the market comes to this level, stops me out, perfectly fine. Then I take my orders off, I take the loss, it is what it is, and then I go on to possibly look for a second reason for entry. So if you're looking for a second reason for entry, this is a pretty big kill zone right here. This is the kill zone. So what you can do is you can wait for the market to come somewhere in this zone and then look for a secondary reason for entry. Say, for example, if the market retraces into this zone, then I look for price to go overbought. Then I look for a lower close aggressive entry signal. Or I look for a double top in here, or whatever entry reason you have. I look for a doji, then I look for or a 3-bar reversal or inside bar. However it is you decide to get involved in the market, then I get involved. Then I put my stops in ATR above the highs of this zone. Let's see, that's at 50s. ATR is about 45, so it's about 95. Sneak it above that even handle number. I have my targets at a retest of the lows. Boom. That's my target down here, wherever the low is off of this. And then what that can do is you can actually kind of lower, or you can figure out where your kill zone is, because for me personally, I need at least a 1-to-1 to get involved in the market. So what you can do is you can take your Fibonacci retracement tool, go from where your stop is to wherever the market swings back, where that entry would be, or your targets would be, and then you can kind of use that as your zone. So then, boom, that's my zone. So now I would actually need a pullback into this zone to get involved in a trade. If I get a pullback into that zone, then I look for the market to go overbought, and then I look to get involved on a lower close. Hold on. Boom, there it goes. Okay, so now I know once the market gets in the zone, then I look for my reason for entry. Very systematic. I know that I need a 1-to-1. I know exactly where my stops are going to be. I know exactly where my targets are going to be. I know exactly what I need to get involved in the market. There is no, maybe this time I'll look for a double top. This market, I lost my last trade on this one. I need a little bit more confirmation. Maybe I need a lower close. None of that. We know exactly what we need to get involved. And that's the main thing. That's what you want to have in trading. You want to have a clear set of rules of why you're getting in a market or why you're not getting in a market. It's going to be frustrating sometimes because you're going to see grade A opportunities that you can't get involved in because you don't have a reason for entry. It doesn't line up with your plan. That's happened to me multiple times. But this is the best way to go about it. If you want to be very black and white, you have a very clear set of rules of why you're getting into a market. And that is something that we all need as newer traders who want to be more consistent. This helps you be consistent because now you have a consistent way of getting involved every single time you enter the market. So that's something I'm looking at on this. And what you could also look for as a reason for entry is you can look to get involved in some type of bat pattern or something in this zone as well if you're looking for a move lower, and you can use that as a possible trend continuation setup. So that's a pullback kind of setup I'm looking for. I'm waiting for, like I said, I'm waiting for a pullback into this little zone right here. And like I said, this zone was powerful in my eyes because this is a zone where price was tested multiple times in the past. When my overall prediction, maybe price to go down here, my initial area I'm predicting price to go is that wick we were looking, not the wick, this wick we're looking at, that initial little swing before market consolidated and broke up to the upside. So that's what I'm looking at on this pair. We'll see how it plays out in this upcoming week. With that being said, let's hop on to the next pair. All right, so the next pair we're going to be looking at, we're looking at the dollar CAD. So looking at the dollar CAD, looking at the daily, similar to the last couple pairs we're looking at, you can see it was a very bearish day that occurred. On the daily, you can see the market pushed up, pushed all the way up to this level, retested it, but we ended up on the lows of the day. When we go down to the 4 hour, get a clear view of what's going on here. I don't know why I'm having a little bit of gap on my data here, but it was basically a bullish day right here, or a bullish 4 hour candle, and then we're having you can see we had a couple hours of bearish price action. Firstly, let's draw out our levels of structure. This is a level of structure to the upside. This is a level of structure to the downside, and this is another level up here, right there. Okay. So you can see right here, we came up, retested this level of structure, price bounced off of this level, and now we're working our way down to this next level of structure right here. Boom. So when we go down to the hourly, you ask yourself, okay, well, I, as a structure trader, expect structure to hold. So if I expect structure to hold, am I looking at this level down here as a potential location where I'm looking to possibly buy the market, looking to get involved that way? You can get involved as a straight structure setup. You can wait for price to come into the zone. If price comes into a level of structure, then I look for price to go overbought or oversold. Once price goes oversold, I look for a higher close to get involved. Boom, stops are an ATR below the lows. That can be a reason for entry, a double bottom possibly if you want to be a little bit more conservative. And if you want to be even more conservative than that, you can look for a possible 2618 type setup. That's one way to get involved in a possible structure trade here. If you are a little bit more aggressive, we actually do have, and this is actually an area where I actually wouldn't mind looking at a possible structure trade. The reason for that is because our next clear level I would be looking for targets is possibly somewhere up here or maybe even right there at 41s. So this is one of those trades where the reason why 41s, because you can see right here, this is a level right here, a level right there, a level that was tested on this wick. And you can see we tested it a few times before we broke down. So I would honestly, this would possibly be the first area I'd be looking for targets. I want to see a straight move down into this zone. If we get a straight move down into that zone, then you can give yourself a pretty good risk reward. You can get about 40 pips, look for some type of counter trend trade. We're at a nice even handle number in the market, 125s. Look for a double bottom. You can give yourself a pretty decent CTS type setup here. So if we want to do a CTS type setup, we're looking at that. You can say, boom, we got minor structure down here. We got, if price goes overbought on the way down, price goes overbought. Say we have a double bottom with divergence down here as well. Boom, right there. That's already 1, 2, 3, 4 points. If you are a pattern trader, we actually do have a pattern setting up at this location as well. We can go right here. If we go from X to A, you can see right there we hit a 50% retracement. When you hit a 50% retracement, that puts me on alert for a bat pattern. And we go from A to B. You can see right there we at least hit a 382. So we know the C leg is valid, and then we look for an 886 for a completion of that bat pattern. Boom, right down here in this level as well. So you can see we have a pattern completion at that level as well. Pattern completion. And what else? We ABCD. I don't think we have any ABCDs lining up in there. No, but like I said, we do know we do have a fib in that level. Let's see if we have any Fibonacci. Go right there. Extension. We do have a 618 down in there, so we do have some confluence. We do have in this zone, so we have fib confluence in this zone. Boom, we do have an even handle number as well, that 125 level. So you can see this is a pretty decent level where the market could reverse, because you have all these things. If you, like I said, if we do get a double bottom in here with divergence, you have all these things lining up in this level. So this could be a decent level where you're possibly looking for the market to maybe not completely reverse, but you can see a little bit of a bounce, a little bit of a counter trend trade setting up at this level. So that's something you can look at if you're looking to get involved in some type of counter trend trade. But if you're a little more aggressive, you can just look to get involved in the bat pattern that we looked at. Boom. So right here, we go X to A to B, B to C, and a CDD completion down here at the 886. You have your stops below X. I use a 113 for my stops, right there at about 124.84s. Boom. Stops are set. I know exactly where my stops are going to be at before I enter the trade. I know exactly where my entries are going to be at on this aggressive. I have an aggressive limit order for this when I trade pattern, so I have that setting there. And then I know my targets once I get triggered into this trade are going to be a 382 and a 618 of basically A to D. And then as price goes down, if price goes down, I extend it with it as well. So best case scenario, this is what our risk reward is going to look like. This is going to be our risk. This is going to be our reward for target 1, and this is going to be our reward for target 2. So let me color that in for you guys, get a better view of what that looks like. There, boom, green, and green. That's boom. Okay, so you can see right there, it's a pretty decent risk reward on the bat pattern. But if, like I said, if you're not, you get about a 1 1/4 to 1. If you're not as aggressive as if you to trade patterns, like I said, you can wait for some type of counter trend setup in this zone. Like I said, and this is one of those times where you want to see the market. You know, you want to catch that falling knife. You want to see the market come straight down into the zone. What you don't want is you don't want any type of well, I take that back. If you aren't a structure trader and you don't value structure like the way I do in regards to where you're looking for targets, what you don't want is you don't want price to come down, retrace off of here, and then come down into the zone. Because if that happens, it doesn't give you a great area for targets. The initial area I would have to look for targets if that happened would be right here, this little outside return, because that's our first level of structure. Would be something like that as opposed to somewhere up here. So you can see, you know, it's one of those times catching a falling knife isn't always bad. Isn't always as bad as they tell you. As long as you have a good risk reward, you have a right reason for entry, you have a tested setup that you know you have an edge in the market. So there's a few different things setting up on this pair. If you aren't a pattern trader and you aren't a structure trader, you could just wait for a break of this zone. You could wait for a break of this area. And if we get a break of this area, you can ask yourself, okay, if we get a break of this zone, where am I predicting price to go? This is the next swing in the market down here. But similar to the last couple pairs, we do have some wicks along the way where I do expect to see some type of not want to say pushback, but you'll get some type of pushback in the market where it's not going to be a nice clean move. It might, who knows? We don't know what the market's going to do, but you can see it isn't a clean move. It isn't a move like something like this where it's just a straight move down. You will have some type of structure along the way, but we'll see if the market breaks the zone. Until that happens, you know, we're expecting this. I take that back. I hate saying we because I always remember this is the way I view the market. You guys don't all view it the same way I do. I view structure holding until it's broken. So I'm expecting this level to hold until it's broken, and if I'm expecting it to hold, I'm expecting it to I'm looking for patterns for right now. I'm looking for structure plays until we can get a break of one of these two areas. So that's the way I'm viewing this market. So hopefully we'll see what happens this upcoming week. All right, so that's the end of this week's video. Hopefully you guys got value out of it. Hopefully it was valuable in regards to showing you what was helpful for me in my trading. Like I said, to make it very systematic, make it very if-then syntax. hopefully it was helpful. If you guys don't have that in your trading, you guys think it might be helpful, hopefully you guys are out there working on this weekend, you know, getting that if then statements into your trading and breaking that down that way so you can be more systematic as well. Like I said, if you guys got value of the video, don't forget to hit that like, subscribe button down below and a little notification bell. That way I know when sending my future videos. I will see you guys in next week's video. Take care and have a great rest of your weekends. I'll see you then. Bye.